You found an apartment
Sure.
or a house and you want to get a mortgage. What is the first thing that you do?
So prior to actually looking for an apartment or a house, ideally, what you've done is you've spoken to somebody, whether that's your bank, whether that's a bank, or whether that's a broker like myself, and you've actually checked that you're eligible to get a mortgage.
Which is pre-approval, I
That's
think.
pre-approval. Now, there's different ways to get pre-approved. The first way, the most common way that people are familiar with is called an agreement in principle, sometimes called a decision in principle.
Yeah.
Now, that isn't worth the paper it's written on. It's nonsense, basically.
Okay.
Essentially, what's happening in that process is you're checking whether or not you passed a lender's affordability assessment and whether or not you passed their initial credit score. Often what they call a soft footprint credit search. What a soft footprint credit search basically means it's only available. The only people that can see that a credit search has been done are people within that bank's particular banking group. So if, for example, I did it with Santander, only people within Santander could see that they'd done a credit search. Somebody at Lloyd's couldn't see that, for example. Does that make sense?
Yes.
Cool.
So as far as in my knowledge, I've seen that there's two types of credit checks exist. One is like soft check, which everyone, I think, can see it, or it was other way around?
It's the other way around. So soft footprint is the one that only internally within the bank you can see, or the banking group, I should say.
Yeah.
Externally, nobody can see that it's been done. A hard footprint, everybody can see. Now, if you still do multiple soft footprint credit search, that can still have an impact on your credit file. So you don't want to go and do 5 or 6 of them in a short space of time, because that's going to start affecting your credit score, even if you pass all of them. Okay. So you want to be a bit sensible about what you do there. Now, a lot of estate agents ask for an agreement in principle because they want to make sure somebody's a serious buyer.
Yeah.
However, you've not really proved anything as part of that process, because you've not evidenced any of your income. You've just said, I earn this much. I could say I earn £500,000 today. I have no way to evidence that, but nobody's asked me to evidence it.
What if someone just wanted to see and they earn 500K a year?
Sure.
Would that affect in their credit score or their credibility later on date, or this is just like a soft?
It's just an initial check. And what the lender's doing is they're doing an affordability assessment.
Yeah.
So that they're saying, does somebody that earns £500,000 a year with these debts, could they afford to borrow this loan size? And if the answer is yes, they'll say yes, because you've not had to evidence anything at that point in time. Yeah. Obviously, it's in your favor to actually give the truth, because you want to get a decent outcome and a realistic outcome. Yeah. But there's nothing obliging the lender to lend to you at that point in time. That's simply an idea of what you're able to do. Yeah. Now, if you've had no credit issues, you don't really need to do a credit search to actually check your affordability. Every lender has an affordability calculator, so you can work out how much you can afford to borrow without that. So most of the time where I'll do a credit search is where somebody's either had adverse credit, so they've had some missed payments, they've had some defaults or CCJs in the past, or they've not got very much credit history, and we're not sure if they're going to be able to pass a credit score. Or if, it's basically those two scenarios, or where we're kind of not 100% sure whether somebody's going to be okay to do it or not. Otherwise, if you come to me and say, I've had credit and it's generally been pretty good, I've kept up all my payments, I'm not concerned about you passing a credit score. It's more about, let's understand how much you're likely to be able to afford. The other thing to bear in mind there is, if I go and get an agreement in principle with Santander today, who's to say Santander have got the best rate by the time that I'm actually ready to proceed with a mortgage? It could be that Nationwide have the best rate, or Halifax, or anybody else. So I don't want to start credit scoring myself unnecessarily unless I really, really have to.
Yeah. So, and that's the point that you actually found your apartment or your house that you wanted to buy.
Precisely. Okay. Precisely. And just to kind of come to that point about what happens once you do find a house that you want to buy. So as part of the buying process, the agent will often ask you whether you have an agreement in principle. So you can confirm that, yes, I've spoken to a mortgage broker, I've spoken to my lender, and they've confirmed that I'm good for the money. And most brokers will have some way of confirming that they've checked that you're okay for the money. Once an offer is accepted, that's when the real work of buying a property really begins. So once an offer is accepted on a property, that's when you collect all the information And that's when you start researching the market to identify who's going to be the best the mortgage option for your particular needs. When you talk to someone like myself, you'll also get advice about what's the best type of mortgage to go for your particular needs. So there could be a fixed rate or a variable rate. How long do you want to borrow the money for? All these things depend on your personal circumstances. So that's what we have a conversation about. That's when I then start looking at lenders and identifying who's going to be okay with lending to you on your particular circumstances. If you're what we call a vanilla case, where pretty much everyone can lend to you, you're just looking for the best rate.
Yeah.
But if you've got something a little bit quirky about your circumstances, or sometimes it's not even you, sometimes it's the property that you're buying. So, you mentioned a flat. If you're buying a flat that's, for example, above a commercial premises, not every lender is going to be able to lend on that property. So you have to try and identify who's going to be the best option. And then I can come back with a recommendation and say, Naeem, this is the one I'm recommending to you. Here are the reasons why, and these are the details of the products I'm recommending. And then you can say, great, yes, happy with that, let's proceed. Or actually, why didn't we look at this, or this?
So it is important, if you're decided to get a mortgage, you need to speak to a financial advisor.
Yourself. From a personal interest perspective, yes, yeah. I would say speak to somebody, just in the same way where... Yeah. If you're fixing,
it's always a good idea, though.
Yeah, I mean, some people are good at fixing their car on their own.
Yes.
A lot of people aren't good at fixing their car on their own.
But you need a lot of research, right? Like you already have that research, you already have that knowledge. So
precisely, I've been doing this every day for 10 years. You do it once every couple of years in best case scenario. So I'm likely to know just more about the market just through exposure alone.
Yes.